Okay, hello and welcome everyone. Today is Wednesday, April 1st. Michael Boutros on the wire with you guys. Good to be here. Good morning, Petro says, good morning, Michael, AV, loud and clear. Thanks for that. Eileen, Permendra, Leon, Chintan, Jordan is in the room. Andrew, good morning to all of you. So, we open up April trade after a very interesting close. The end quarter month open transition did not disappoint. You got some crazy volatility on some of these pairs we'll be looking at today, but still treading lightly. I'm sure you're probably sick of hearing me saying that, but it's times like these, guys. I'll show you some trades I took today. I'm pretty much a wash already, just because this time period or this environment for near-term trading as far as scalping is concerned on the intraday level can be very tricky. Your ending month flows, you got some rebalancing going on. Sometimes you get those massive swings. Who knew that the Dow was going to sell off 200 points on the last day of the quarter to end it down, right? Classic stuff. This is why we stay a little bit more on the sidelines, but we'll definitely look at some plays that are currently panning out pretty well. First things first, just a quick look at the U.S. dollar is what you're looking at here. You can see that the dollar is a little bit on a back foot today, taking it softer against the Aussie, yen, Swissy, interestingly enough, up 0.61%, pound and Kiwi bucking the trends here, slightly weaker on this session. So you can see where the dollar index just topped right at that trend line resistance that we were looking at early in the week after coming off of this major key slope support, and this is still critical heading into Friday's non-farm payroll print. Again, that non-farm payroll print continues to be revised. A quick look at the economic docket for today, guys. ADP employment change did come in slightly weaker than expected. 189 was the print. We were looking for 225. There was also an upward revision slightly of 214 from 212 on the last read. Some people like to use this as a barometer for a non-farm payroll print. In my research, I've found that they broadly do move together, guys, but ADP is specifically notorious for missing larger swings in the NFP print, meaning they will typically broadly move together. On a weaker NFP print, you might get a weaker ADP print, or you might see the slope of the two, the correlation broadly hold. But on larger NFP swings, meaning a huge miss or a huge blowout print, ADP typically will mask that. So take it for what it's worth. I don't like to do any corollary assumptions on that print, but just a little tidbit for you there. Later in the session, we do get market US PMI data, which is also going to be the final print for March, not a major print. Major read today is going to be the ISM manufacturing and the construction spending. That comes in at 10 o'clock. So we'll have to see if the dollar index holds this resistance, but be in view here, okay, and some of the crosses that we've been looking at, specifically on the Aussie short, which is coming to support. We'll talk about that. Just know that the dollar index, this is the Dow Jones FXCM dollar index, again, equally weighted at its inception, the euro, Aussie, sterling, and yen, does have us coming into near-term resistance, okay? The bottom of that support structure at that point pretty much stretches just beyond the 12,000 mark, 11,976 or so on that slope support. So very clear picture to open up April trade of where the dollar is trading. Again, it's the first day of the month, first day of the quarter, momentum coming right into resistance at 60. If this is going to be a broader turnover, you're going to want to see this hold right here near term on momentum. All right. Hey, Gert, great to see you in the room. Says, hi, Mike. It's been a while. Took a month off from trading and life. Refreshed for April. Hope you're well, Gert. Great to have you back in the room. Sometimes it's very necessary, my friend. You're talking to a guy who's been there before, so definitely welcome back. Nice, fresh perspective always helps. In fact, Jamie just made it back from his vacation, too, and he's looking all tan and ready to go as well. He said maybe we should take more vacations. The trades work out better. So some great trades on the swing side of things with the Aussie and the Euro Yen really hitting the home run there. So let's jump right into the scalps, guys. Here's what we're looking at. First things first, I'm just going to go right down the line. And for your information, guys, whenever you're going through the reports at night, you can always click to see the webinar of that day. Okay, I specifically wait all till night to post these for you so that the dates match up. And when you go through the webinar, my objective is that we just go right through the report as is. So for people who want to review real quick what the trade is doing, you can always watch the webinar and you'll know roughly, where their discussion is on that pair. Just go right through the webinar. It's going to go right through the report, and then we'll keep that latter section for questions and Q&A. Gert says, I agree. 2 winners this AM already. Good April. Nice start. Nice start. Well, you're doing better than I did. Let me tell you. Maybe it's a self-fulfilling prophecy because I always, talk all that smack about not wanting to trade these crosses on the quarters and months. But in any event, Euro Yen. So went neutral on this last night. If you got the hint, at the end of the day, the thing came into the 128.75, which was the last target that we had. It was a nice confluence with a median line off the low. This was going to be the near-term bullish invalidation. Okay, so momentum came right back above 30. We actually came and tested the opening range lows for U.S. and Asia to the pip almost before rebounding. Here's what Euro Yen looks like right now. Okay, so we're still holding that same range. The bearish invalidation level that we marked last night is also still in play, and that's 129.32 still. Excuse me. So as long as we stay below 130, not 129.32, you want to be weary. It's this breakout that would shift the bias back to the upside. You're still within the confines of this descending formation. So this is just a sliding parallel, by the way, guys, of that formation that we've been trading all week. When we took that break of the, the 129.90 barrier, early in the week. I think it was on Monday, if I'm not mistaken. I'm sorry, guys. Give me one sec. Yeah, that was on the Sunday. That was on the Sunday Monday rally. So that break, right, shifted it to the downside. All you did is just take a basic slope of the same exact trajectory and slide it to the highs there. When you match it up, it's the exact high that you made right ahead of the European Open. So watch that range there of resistance as we head into U.S. trade. That's the only thing that would invalidate the short bias. A downside break, as noted in the report, looks for a run into 128, looks for that median line parallel. And again, that's like heading into the close of U.S. trade here if we do see that start to materialize. Look at the momentum signature since the start of the week. 60 hold, 60 hold, still holding 60. Okay, all bearish developments here. So support trigger, and we're watching that into the U.S. Open. The best opening ranges have still been giving out in the European-Asia crossover, guys. There's nothing I can do about that. It's just the way the levels are playing out. But if you're trading that time period or that time zone, they have given us the best triggers. So not my favorite scalp anymore. The decline off the highs here from the week was probably the best play I think we'll get on this heading into NFPs. I'm kind of off to the sides. I haven't taken anything on this. Most of my dealings have been in the sterling crosses, and we'll talk about that in a minute. Any questions on Euro Yen, though? Levels are good. Nothing's changed. Just watch this range. I'm not really interested in playing in here anymore. I either want to see this break and look for a rally into 129.90, or if we get a short trigger here and the U.S. opening range opens to the downside, maybe you can target that 128.60 barrier again, depending on where we are in time. But if you look at the daily, it just looks a little tired here, guys. Just looks a little tired. Momentum is sitting at 40 here, so you don't really know if the material break happens, adding emphasis to that 128.60 level to the short. But I think we just let this sit here for a little bit. There's other setups that are way more attractive. All right. Now into the good stuff. Real quick recovery of Euro Oz. I posted this yesterday about 1 o'clock here on SB. I even featured this on a setup on Daily FX as well. I don't quite think it's primed, but I think Jamie's more on the right track with this one. So if you check out the swing trades, they're actually looking for a possible move on this as well. So in the Euro Oz, 142.23.34 is sort of where we're looking for resistance on the swing side of things. I have near term 141.60, 141.70, and I highlighted that yesterday on Daily FX as well. It's 100% off the low and a 38.2 off the high. If this gives out, right on with the swing trades, guys. Look for 42.35. It extends into this whole range right here, okay? You have the close lows for October, November. You got that trend line or median line, upper median line parallel resistance from February. There's a lot of stuff up there. And ahead of that is a 50% retracement, which would be a nice stop against on the push. Near term, though, you still want to watch out on a scalp basis below 141.70. Okay, and that's still going to be the near-term bearish invalidation level. Here's what the scalp looks like for Euro Oz. So from yesterday's setup, we're still right within that same exact range. Okay, the bullish invalidation level, remember, this has been in a clear uptrend, right, on the near term, off the lows here. So the bullish invalidation level was right here. We came for an exact tag of that. Again, right ahead of, well, when was that? This was heading into last night. Turned right ahead of it, momentum holding 40 again, as we were noting in the report, that was the risk. And here we are holding a very, very clean, objective weekly opening range. And that's how you want to play these, especially when a trade is coming into key resistance. You know, let the opening range pan out. Yeah, there's opportunities to get involved on the inside here, but you have to be super nimble, okay? Super nimble. You don't even want to be looking at the ATR at this point because you're just playing the inside opening range for the week. And as we hold 40, 60, 40, 60 in momentum here, look for a break of that alongside a break in price, and that will give you the near-term directional bias. A little bit tedious because you got to wait it out, but it's the first day of the month. You know, we're just crossing over. So let this thing pan. And I think if we get a short trigger in today's U.S. Open to the downside, again, target that median line. If you get a breach, look for the upper median line parallel. Look for that 42.35 level. And again, on the near term here, if I zoom this out, let these lines snap, you'll see nice little corner right there that we can target on a topside scenario break here. So, still no trades on Euro-Aus, but the setup is very clean. And again, we'll be looking for that near-term break on the opening range to either offer a rally for better shorts up here or to play the turnover, looking for the lower median line parallel. Again, that's the weekly opening range low. That's a 618 extension. Huge, huge, right? So very well-defined opening range here for Euro-Aus. All right, sterling crosses. Here we go. Again, if you guys have any questions, feel free to throw those on the wire on any of these setups that we're going through as we're going through them. Sterling CAD, rather. This guy. I ate a stop on this last night. Sterling Oz workout. Sterling CAD was being a little bit stubborn. Here's what the Sterling CAD looks like on the daily first. So remember where we are in the broader scheme of things. Okay, the move that we made to break through the 87 barrier, it was basically 87 to 86.66, was huge. That was accompanied with a trigger break in momentum. 4-point trigger break shifted the bias to the upside. The stretch came basically into the initial opening range low for the month, and then turn around. Okay, so objectively, we're right back into a major key support barrier. This is what invalidated the shorts. This is what will invalidate the long side of the bias. So you're at risk here for a breakdown. We put this in yesterday's piece right here. The RSI signature. So looking at the RSI signature here, we want to say that, listen, you're going to want to see on the intraday, where's Sterling CAD, on the 30-minute, the RSI signature finally breaks 60, right? Or break 40, rather, as support. Since the start of the week, since that initial rebound, right, this is all constructive. So this is the trigger that invalidated. We were looking at this yesterday while the market was opening, if you guys remember. As we were in the webinar, this thing was breaking back below 88.32. That was going to be the near-term bullish invalidation level. We had highlighted that. So you're looking for shorts from there on. But from the momentum standpoint, you need to see that turnaround, 60 hold, and a 40 break. That's exactly what you got. It's exactly what you got. So on the intraday, here's what Sterling CAD looked like. Okay? And again, this is partially my fault, and I completely recognize that. And it's always important, guys, to go back if you take a stop like this and kind of just assess what made you get into the position. For me, it was probably just pure exhaustion, and I wanted to go to sleep. I actually just put this trade on and let it go, and I woke up to find that it had given us a stop here at 1 o'clock in the morning. So the long exposure was for a 40-pip run, which you inevitably would have got, and the initial entry was just ill-timed. It looked like we were breaking the initial opening range. I even tweeted this chart, guys. This was just me jumping the gun. That's all it was. And there was a trigger here I was looking at. It's not the most well-defined trigger, but just goes to show you. Play too close to the heart. If the stop had been against the lows as we should have left it, then we would have gotten initially the 40-pip run, would have triggered out here. Long story short, Played it too close on that one. We got stopped out with momentum, still not even giving us a break necessarily of the 40 level. So on the turnaround, very nice trigger on the short for sure. A little bit more conviction on that one. Again, taking the low in price. I wouldn't even use that. Probably would have just used the 50 break there on the break of the opening range lows for Asia. This was also the opening range lows for Europe. So again, a nice play on that front. Really shifted the bias. And again, once you broke the invalidation level, you're looking lower. Near-term support, 186.95 into 187 is the first target. The next big target, guys, is going to be right here, 186.66. Okay, and that's a 2014 high. And it's been a very nice pivot in price over the last couple of weeks. Here's us catching a weekly low. Here's last week's opening range low tested as resistance. And right now is going to be a nice confluence region of some trend lines. Let me snap this and show you what the broader picture looks like here. All right, so you got the lower median line parallel support here. And then again, 86.66 is going to be the actual 2014 high. So coming into some near-term support. Momentum and oversold condition, that's not when you want to fade anything. That's when the market has the most push. So if you're holding shorts on this, still looks pretty good. Let's just make it out the underbelly here of the opening range for the week. And watch that drop into 86.68 is the initial top side of that resistance. The bottom side of that resistance, again, is going to come with that median line parallel. So based on time, we should probably choke this up a little bit. That's sort of the support barrier you want to watch for on sterling CAD. It didn't really reverse enough to have waited, right? Eileen, say that again. So let me read that first comment first. Eileen says, sterling CAD, entering on the short break. Do you wait until 40 to enter or higher up? Do you wait until 40 breaks? Or do you enter higher up? On a move like this, yeah, on a move like this, honestly, there's not really much you don't do if you don't catch it on the upswing here. The tell here was the turnaround. Let's look at the near-term chart, Eileen. Let's not make any assumptions. So on this type of trade, you're asking, do you wait for this 40 break or do you take this trigger? I probably wouldn't have taken this trigger because by the time that broke, Eileen, your stop is way out there. Your stop is 50 pips. You're looking for 40 pips. I don't think you can take that. You'd need to wait for the rebound to take a short again. And that would have happened on something like this. That would have been a short here on this rebound back onto the inside after that trigger with a stop against 87.56. That's how I would have played it. Does that make sense, Eileen? So you get the trigger break. That's a conviction bias shift to the downside, right? If you didn't catch that break, again, even if you did catch that break, 87.22 against 87.58 would have still sufficed. You're looking for the 40 pips to the downside. But the better move would have been to wait for some sort of recovery in price. And then when momentum fails to even make it above 40, and you get that pin head candle, then even then, the stop would have still worked. On days like today, Eileen, though, it's just not something I'll do. It's just not something I'll do. I'm on the sidelines here, especially as you just open up the session for the first day of the month. So take it for what it's worth. Sterling Oz worked a little bit better, but believe it or not, guys, not even a joke. That was an accidental exit. I just wasn't paying attention, I guess, last night. I don't know what happened, but I kind of just put I was trying to stagger the limits, and I put the entire lottage at the first 20 pips, so it just took me out. In any event, the stop was against the highs, so we would have just missed it on this one and eventually would have gotten the 50 pips. Long story short, we're pretty much a wash here. We're pretty much a wash here to start off the month, and that's the story of my life trading the quarterly and monthly crosses. But in any event, Sterling Oz. Any questions here on Sterling CAD? So watch for the turnover. Again, near term, this is going to be the bullish invalidation level. And we're breaking it now, so look for that drop into the lower median line parallel, 86.68, near-term support. Petra says, I was awake when Sterling CAD broke to the upside. I just didn't like the upside for some reason, so I didn't jump. Right on, Petro. You had that nice position though, right? Yesterday we were talking on Twitter. Not bad. Gert says I was long sterling CAD from 185.21. Excuse me. Was looking for new highs. Got some 250 pips on the long side. Nice run, man. Well done. Well done, Gert. Playing those longer term swings, man. It looks really good. I mean, if you had seen this breakout right here when we were talking about this last week, that was a really huge move. I mean. And it's funny because that's the exact support that we're checking right now, okay? This was the major break last week, and it's only because of that slope range that we've been following. So absolutely, if you got the patience for it on the upswings, absolutely. Here's Sterling Oz from yesterday. So coming into a major area of resistance, and you know, we were looking for short triggers while below the 195 handle. 195, you know, represented a lot. There's basically a lot right into 195. You have a longer-term trend line, which is on the daily chart, and on the scale chart specifically, right here, this green line. Okay, huge pivotal region. On the daily chart, you can see it as well. Okay, and a basic 618 retracement of decline off of the monthly high. So you had that to contend with, okay? On the way up on the initial tag, you also had the operative upper median line parallels there as well. And it was the target that we noted on the Monday night print. Long story short, that's exactly where the market found some resistance. You put in some divergence into the highs. You saw a trigger break that shifted the bias to the downside. On the upswing, okay? Look what this thing did. Let me bring it up here on the live chart as well. Okay, so on the upswing, look what this thing did. Came right into that trigger resistance. Nope, and it held. Okay. And right now, excuse me, I'm losing my focus here. The focus is on the 94 at 95 range. Okay, and this is the near-term bearish invalidation level. So we're looking for short triggers below this. The conviction scalp happens once we get back below 94, the lower median line parallel. You play targets into 93.20. Which, if you remember, the day before, 93.20 was marked as the near-term bullish invalidation level, okay? And that held. So as long as the 93.20 barrier holds a support, or that's what we need to really validate a near-term turnaround in Sterling Oz. Don't forget the broader picture for this trade is pretty clear as well. Here's what the daily looks like. So we came into that median line parallel. Again, that's 618. Nice reversal candle here. You can get a pullback. You don't want to get too excited on the pullbacks just yet, but this is the major invalidation level for the near-term uptrend, okay? And you're playing the downswing at this point. So the short last night, again, whatever, you know, it would have panned out. Long story short, we would have eventually gotten stopped out at least half the trade because I only had a limit for half of it at 50. So that would have taken out half of it. We would have gotten stopped out on that spike in overnight trade. Would have offered a nice opportunity for back on the short side here. Going to need to see it break below that 94 handle near term to maintain the downside bias. Okay, so right now you're just playing within this range. Once we get below here, if you're holding shorts right now, you're just bringing your stops down. You're taking some off the table, but this is the real test for the reversal play here in Sterling Oz. Super clean, guys, super clean, and a massive range. A quarter of the daily ATR is still 55 pips. So if you're looking for something with a little bit more meat on it, this is what we're looking at. Also, look at the momentum signature here as well. We're going to want to see that 40 break to give us the reversal conviction in momentum. Again, the divergence into the highs, trigger break. You know, this warrants short exposure on trigger breaks, intraday opening range breaks to the short side. It's actually still the preferred play over Sterling Oz. Questions on the Sterling Oz scalp or Sterling CAD at this point? Okay, could get a trigger break here to open up the U.S. opening range. Let's see what the opening range looks like so far. 94.50, 94, 50 pips, quarter of daily TR, 50 pips. Looks pretty good. So see what the U.S. opening range looks like. If you get this trigger break and Momentum does finally break the U.S. opening range. I'm not going to really touch it. You could probably get a rally right back into 94.50 or so. Or that is the opening range high. Maybe into the median line here again, and then look for a short. But the operative trend line, guys, is that longer term median line. That's really the major thing that we're trading against. Again, let this snap real quick. Right there. Okay, that green line right there. Really, really critical. So that's the rebound that we're trading against. This is what will open up a little bit more of a conviction downside. All right, and that's Sterling Oz. A quick update on gold. I didn't think there's really much anything worth noting yesterday. Look, I don't think we should necessarily be looking to play the downside on gold at this point. The invalidation for the long was 11.95. We talked about this briefly yesterday in the webinar, but I think we just look for a low here. I don't think that the rally is necessarily done. This is my near-term bullish invalidation level. Not necessarily something we scalp, guys, but such a major, major trade that everyone's looking at right now, and specifically with where the dollar is, could be a tell heading into NFPs. So we'll be watching for near-term resistance again at 11.97, 11.95. If that holds, you start to risk for this thing to fall apart again. But at the end of the day, I still think you can make probably a new low here and show us a recovery still. Remember, guys, the outside reversal weekly candle that we made on those lows at critical support on the weekly chart is not something I'm taking lightly. I think this rebound could charge a little bit more of an advance. Looking for 1236 here on a stretch. But, again, opening up the quarter, opening up the month, and we closed last quarter, guys, if you notice, almost unchanged on the year. Literally. The open, 1168. Yesterday's close, 1183. We got a little bit of a rally. Off that. But critical days here for gold. So watch the opening range for the month. We'll let this thing pan out. Near term, you know exactly where we're looking at as far as our near-term support and our broader bullish invalidation. Okay, so those are the scalps that we're following on the intraday trade. A look a little bit at the dollar crosses. I know that a lot of you guys are looking forward to NFPs on Friday. I don't really know if we're going to get a major play, and that's just because of what I was talking about during yesterday's piece. I don't really think the Fed, I mean, the stress is just not on the employment picture, and I just think the risk is to the downside. I mean, as long as we come broadly in line with expectations, every time we hear the Fed speaks, guys, it's just fluff. It's almost, tedious at this point to even listen because it's all data dependent, yada, yada, yada. We don't care. At the end of the day, we're following price. What are the opportunities going to be? Well, here's what the Euro scalp looks like so far. This is the same scalp setup, guys, that was featured on the intraday page last week. I didn't want to really stress it to open up this week because of where we were from the monthly standpoint and timing, but the levels have actually still continued to be very, very clean. The opening range for the week is set. Opening range high comes in just below 109. Opening range low comes in just above the support that we were looking at 107, 106.98. Nice confluence region here. It's a 786 retracement off the low, 100% extension off the high. Just missed it by a couple of pips on that last stretch, yesterday. So near-term resistance, 107.90, basically the 108 handle. If we do get through this, you look for a recovery back towards 107.75, a near-term play on the euro. And again, dollar index, we just talked about that coming off resistance, right? This shouldn't be any surprise. If we do get a recovery, a dollar pullback, euro sees a little bit of an upswing. So from the scalp perspective, we can get that shift here if we clear 107 as resistance. But if you tack on a quick retracement, which we don't have the conviction to do yet unless this breaks. So again, I'm not really a fan of always tacking on just to near-term low because you have no way of validating that low. But that being said, if you do get a 60 break in momentum, a break of the U.S. opening range to the upside on a pullback, longs against this region, looking for 108.40 on an initial stretch. And then again, like I said, 108.75 is going to be the real test. That's basically where we opened the week. Also note that the ATR here, about 44 pips, 40 pips per scalp should suffice, so keep that in mind as far as the stops are concerned for euro dollar. The short side, not really on my menu right now for the euro. Maybe heading into NFPs, but the immediate short side, just not on the menu, at least for me. If you look at the daily chart, again, it just looks a little tired. Momentum is at support. It's at 40. And with the dollar index at resistance, it's just not my play right here. So we will see if the euro dollar gives us that topside break. It might be a nice opportunity to play the recovery. Again, initial targets 108.40, 108.75, 108.80. Let's see if there's anything interesting on the 5-minute charts on that. Okay, could be a near-term structure in play here. You can notice that the slope is really, the gradient is really, really soft, right? And then, again, you're just starting off the month, guys, and this kind of stuff just, if there's not enough room for the targets on the near-term structures for the upside, you just want to be a little bit more cautious. That being said, still highlights the 108 region as resistance, and that's all that matters right now. So even on a 108 break on the near term, that would kind of open up a topside pop scenario. 108.40, 108.50 would be another slope line we're watching on the near term. All right, let's see if the U.S. opening range sets up. This would be a nice play here, possibly for the euro dollar on a recovery play into targets into 109. Any questions on euro dollar? Also note that since that trigger break, okay, that you saw since the start of the week, right? Here's your weekly open on the euro, rebounded off that median line. There is the near-term bearish invalidation level, remains near-term bearish invalidation level. Look on the kickback. We defended the opening range low for the week. Momentum finds 40. Adds more significance here if we see the 60 break with a move above that 107.90 barrier. So possible play there on the euro. British pound has also been a little bit of a lackluster play here. Not really something I've been watching. This was the median line formation we were watching all last week. It's actually still been in play as resistance. Pretty uncanny on the rebounds there. But, geez, there's not really much to work with except, this is just an objective opening range low here at 107.50. Maybe eye that as support. Not really a play. Again, not surprising heading into non-farm payrolls. You do have some UK data that's going to be on tap as well. PMI data around the clock, actually. So could be a play here, but let this thing contract, guys. Just let it go. The sterling crosses have been so much more clear that sterling dollar, in my mind, just doesn't merit much attention at this point. Aussie dollar has been trying to battle with this near-term support. So this thing crashed through all the targets that we had on the reversal scalp that we published last week. There is not much to the downside I'm interested in playing at this point. We highlighted this last in the webinar yesterday as the near-term bullish invalidation level for the reversal play. We came into it and it looked pretty hairy for a second, but it's still holding. Okay, not going to touch this again. Remember, as we said yesterday, this was the bearish invalidation level, meaning if we break from here, we're going to play the reversal to the upside, but that level is still intact. We're still going to keep that as the near-term bearish invalidation. So Dollar index at resistance, Aussie dollar at support, same type of game plan, right, as we're looking at with the euro, and especially with all this event risk coming up for the dollar into the end of the week. It's prudent for us to stay in the crosses, I think, and let these opening ranges pan out. Let the opening range for the month set and get some more clarity on this front. Another thing that you also want to note is the Euro Aus is probably a better play if you're still trying to play some Aussie recovery near term, which I think is prudent after such a drop. You want to be on the conviction side of the trade. So any longs that you take here are still half leverage, right? Because the broader bias remains weighted to the downside. You haven't seen a 60 break in momentum. You haven't gotten a break of an opening range high yet. That shifts the focus to the upside. So that's still in play. We need a 76-60 break to get this going for a near-term recovery. Dollar yen looks like this on the daily. If you thought the pound was boring, you should come look at this for a little bit this week. That'll put you to sleep. Okay, so 120.20 is still the level of focus. A nice confluence at this point, and the whole focus for me as we even opened up Sunday was, are we going to see this hold? This is so critical. I don't really care so much. I'm sure online you'll see this everywhere. But, okay, cool. Basic trendline resistance too. But if this is the real break of support, check it as resistance, and move off is the game plan. If this breaks, now you've invalidated a whole bunch of stuff, right? And you look to play the recovery back to the upside on a broader uptrend in general. So I think it's pretty big here for the dollar yen heading into the non-farm payroll print. Here's what the intraday looks like on the Yenski. So you can see it's getting a little messy here on the levels. Here's the operative slope that I was looking at. I don't really know what you want to do with that. At the end of the day, it's just a lack of clarity ahead of major data in the U.S. and the opening of second quarter April trade. Yeah, watch 120.20. This is still the major key region, both on the daily and the intraday. I kind of like the big divergence on the Aussie dollar hourly, says Mark. Let's take a look. So you're definitely getting some divergence, but remember, Mark, we talked about this last week. Divergence in and of itself doesn't prompt action, in my opinion. You need the follow-through trigger, because divergence has no bearing on time. Things can show divergence, for an indefinite time period, guys. There can be divergent signals that last a month on daily charts. On hourly charts, could last days before the trade turns around. So I just want to warn you from taking it based on that. But the trigger, on a divergence into a trigger break, if you're not sick of hearing me say it, again, 9 times out of 10, that's something we'll be interested in. A slight adjustment to our pitchfork here actually does put us still within the confines of it. Let's work with that slope a little bit. Puts added emphasis where we are right now. Actually, it's actually much, much clearer this way. Yeah, that caught the lows pretty well. All right, sometimes we need to adjust our... Actually, looks like all my levels got misaligned a little bit here. Sorry, guys. I'm kind of a stickler for this. All right, much better. So, Aussie dollar, just in case you guys needed some more clarity on it. On the hourly chart, looks pretty interesting. That's what shifts it. I'm sorry, it's because we changed the time frame. In any event, just be mindful of that. As far as the triggers are concerned, now that we've shifted to the hourly, yeah, again, I wouldn't even worry about the trigger, okay? On this type of play, it's going to be the 50 break. And if this turns out to be the opening range high, so you want this to hold into 9:30, give you like a 9:45, 10 o'clock break. Look for resistance. Again, 76.60, stick to the game plan, guys. Is still going to be the near-term bearish invalidation level. Mark says, yes, just watching, no real action yet. I mean, yeah, it could pan out pretty well. But Mark, definitely the divergence is something I've been watching as well. You can see it on the 32, guys. It's not just on the hourly. Lower low, higher low. Lower low, higher low. And again, divergence only matters on the closes. Wicks don't matter. You're just looking for an extreme in price to not be confirmed in the oscillator. And in fact, every extreme or every new low that we made was accompanied by a higher low in momentum. So the divergence is definitely there. I hear you on that one. Yeah, dollar yen divide half ATR of cable. Yeah, exactly. Another reason not to really. Well, you know what? I mean, which cable pair are you looking at? Because both of them are not really impressive. It's only 23 pips on this one. What's cable right now? I don't even know. Let's take a look. 45. Yeah, literally half. I still don't like the setup on the sterling dollar GS, but nowhere to look, right? I'm 100% with you on that. Nowhere to look, guys. You want to jump into dollar yen looking for a 60 pip move because unless you got time to burn, it's going to take some time. Okay. We went over gold, and that's pretty much all the major pairs that we're looking at, guys, as far as the crosses. I do want to just take a quick segue at Kiwi Dollar because we didn't talk about that. 74.50 was so huge, okay? We broke it. We ran right into the lower median line parallel, and guess where resistance is? Again, 74.50. It was a slow, super slow burning trade. We talked about this level yesterday as the support. We saw a bounce into the close, or into the open of Asia, rather, and then here's the crash through a break of the U.S. lows, the Asia lows. Boom, really strong move. Again, there's nothing here for me to play here, guys. I haven't touched this pair this week, but the levels are just continue to be ridiculously clear. So long story short, below 74.50, you still want to watch out because that's a major pivot in price. Just looking at this objectively, here's your 38.2. Here's the highs for February opening range, which gave you the stretch into the February high. Here's the initial opening range for March. The break gave you the stretch into the March lows. And now we're just opening up, April trade after breaking out of this formation. So as long as you stay within the confines of this, you need to be mindful of any type of long exposure, even if the dollar does correct. This is the level that you need to clear. I know this is a bigger range right now, but this is the level that you need to clear to get back on the constructive side of Kiwi. Other than that, you're looking for short triggers. Huge region. And again, do you remember that ridiculous slope? That's what we're dealing with right now as support. Caught this high, here we are. So I'm mindful of the reactions that we've gotten off of this slope support, form a resistance / inflection point, and a topside break. I'll be more than comfortable playing the recovery. Take a quick retracement. Those will be your targets. On a move back below the median line, I mean, you look for 73.60. That's basically the bottom line. Questions on the Kiwi dollar? All right, so guys, we will wrap it up here for today. Again, we'll be back online tomorrow at 8:30 for another session. If it seems like we're a little bit on the sidelines here, we are. It's the open of the month. It's the open of the quarter. No need to press and start off things on a bad foot. We're kind of flat already trying to mess with those sterling Aus and sterling CAD, but those are still the preferred setups, guys. Watch that dollar index for the resistance close today, guys. If we close below it, again, that'll be a really nice hold of the near-term formation that we're looking at and really sets up for a very nice range as you head into NFPs on Friday. Event risk over the next 24 hours. Keep in mind, heading into tonight, you do have some trade balance data out of Australia. More importantly, you're going to be getting those PMI numbers out of China, and those will have a larger impact on the Aussie crosses as well. So if we're looking at Euro Aus, we're looking at Aussie dollar, both of which have been in view, that's going to be something they'll want to keep into account on a stronger print, specifically fuels the possibility for that Aussie reversal that we talked about earlier. So definitely we'll be on the lookout for those data prints tomorrow. Things on the dollar crosses heading into Friday. Listen, it's a crapshoot. Sit on your hands if you have to. Go play some ball with your kids. Do whatever you need to do. But we need to make sure that we remain prudent here as we open up that trade. And liquidity will start to thin out on Thursday as you head into Friday's release. It is a holiday. You got Easter Sunday. You got Ascension Monday in Europe. Most of the European markets will be closed. So it's really, it's not our best environment for scalping, guys. And it's important that we recognize that. When the trades are there, we press them. When they're not, and when the environment is not in our favor, you want to stay nimble, and you want to just you really reduce your leverage here as we open up the first couple of days of the month. Good luck trading. I will see you all bright and early tomorrow morning. Have a great day. Cheers.